StoneCo announced their earnings today after the market closed, and the stock is down more than 9%. What happened? Why is the stock tanking? I've owned StoneCo for several years, and it's overall a winner for me. I'm up on the stock, but I wanted to take a look at the stock, look at the earnings report, and try to figure out why is the stock down so much? Did they have bad guidance? Did they perform poorly? I'd like to find that out. At the end of this video, what I'll do is I'll make a decision whether I'm going to buy more shares of StoneCo, I'm going to hold my shares, or I'm going to sell my shares in this high growth company. If you haven't run into StoneCo yet, they are a lot like PayPal down in Brazil. Brazil is a high population country that needs services from a company like StoneCo to do credit card processing, banking, digital banking. All kinds of digital financial services are provided by StoneCo. They've been a high growth company and have recently grown 27% on top line revenue, which is very good. Overall, they've been a profitable company and they generate free cash flow. I'm a value investor and I love growth companies, but growth companies that make money and growth companies that generate cash. And StoneCo has certainly been both. Let's take a close look at StoneCo. The fundamentals of StoneCo look good. The company is located in Brazil. Their market cap is $5.44 billion. So that's a small cap financial services company. Revenue is 2.3 billion. So you're paying about, a little over 2 times revenue for a high growth financial technology company. They have good net income, generate good free cash flow. Their forward P is 12.5, which is really low. And it's just a really low PE for a growth company. Several analysts cover it. They all have a buy rating and they have a price target of $18.38. As of tonight, the stock was down to $15.79. So it really, offers up what looks to be a discount high level. I'm going to do my own analysis and determine a value for StoneCo and then compare it to the stock price. Looking at year to date, the stock is down just a little bit. But if you look at the 1 year chart, it's up 92%. So it's done really well, especially in the October timeframe from the late October timeframe to the end of 2023. It just went on a tear. It just took off. And over 5 years, the stock is down. This is a stock that Warren Buffett was an owner in. So as you can imagine, when Warren Buffett enters a stock, it creates a buzz and a lot of people go into it. So the stock traded as high as $90 per share, but it's now down to $15.79. So value investors, we want a good deal on a stock on a great company that is growing. And StoneCo has offered that to investors over the last couple of years. Looking at the growth of StoneCo, boy, they've grown so fast. You see, in 2016, there are 439 million Brazilian coins, up to 9.5 billion, which is a just dramatic rise in growth. And you can see the growth per year on the revenue growth just been really, really impressive. So high growth, high top line, and they're profitable and generate free cash. I'm going to value StoneCo stock by looking at the free cash flows I expect the company is going to produce in the future, discounting those free cash flows to today's value. I'm also going to look at earnings per share and value the stock using earnings per share. To start, I'm going to use free cash flows in the first model, and I'm using the numbers that I got for 2023 of free cash flow. I'm growing it by 20%. The company is growing at 26% on revenue top line, and I'm using a 20% growth factor on free cash flow for the first 4 years. And then the fifth year, I'm going to use a 5% growth rate to establish terminal value. I'm going to use a high weighted average cost of capital because this is an international company located in Brazil, and they are a small company. So I want to be compensated for the additional risk that I'm taking. When I discount all these free cash flows by 13%, I get a net present value of 3.5 billion. I'm going to add the cash, which is 1.1 billion, take away debt, which is 1 billion, and I get to an equity value of 3.6 billion. The market cap is higher at 4.7 billion. So it shows that the stock is currently sold at a premium if you look at the free cash flows of StoneCo. If you look at earnings per share, they look favorable. It's going to be about $1.26 per share. I'm going to have a PE of 24. They are a growth company in a growing part of the world. So I like that. So I'm going to go with a 24. And it gives me a earnings per share value of 24.7. And the current share price is 15.70. So there's actually, if you look at earnings per share, I believe there's about a 57% discount. I put more weight in free cash flows. It's a 2/3 weight of free cash flow calculation versus 1/3 earnings per share. So it gets me to about a 3% discount on StoneCo. In other words, it's fairly priced. I think StoneCo at the new lower price after falling more than 9% at $15.70 seems to be fairly priced on a good company. If they keep growing, all bets are off. I think this could be a huge company that could be worth a lot. So, should I buy more shares of StoneCo, hold my shares, or sell my shares? Well, let's take a close look. I first want to be completely bought into the company. I like the company, the business, the industry, the management team. In the case of StoneCo, that's definitely in the cards. I like their business. I like that they're in a growing country, that really the adoption rate and the penetration rate of digital payment systems isn't that high compared to the US. So I like those aspects of the company. They have an excellent balance sheet. They have more cash than they do debt. There's no discount on the company currently. So I'm just going to be a holder of the StoneCo stock. I'm going to wait till the fundamentals change, maybe showing a discount. And if things get worse, then I would be a seller of the stock. I've held StoneCo stock for some time, and it's been a really interesting ride. I've tried to buy it on really low points and really ride up when the stock would run up. So I'm protected with a nice gain on the stock currently, and I'm glad that that's the case. It'd be a different story if I was underwater and I was losing money on this stock and we had a bit of bad news, which is what we got with this earnings. I think that investors are a little nervous that the growth isn't going to be there in this stock, which may be the case, but it may be the case that they're just reading too much into it. I think that the company is very well run. And again, they're in a growth country with very little penetration on digital payments. So I think they have a very large market that they can sell into. And the total addressable market for StoneCo is very big. Those are the things that I really like. I hope you found my video interesting, and I really appreciate you watching.